Welcome to the Treasury Update podcast, presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in. On this special episode of the Treasury Update podcast, Strategic Treasurer features its 2021 FinTech Hot Seat discussion from the AFP conference. Moderator Uma Wilson, Executive Vice President, Chief Information and Product Officer of UMB Bank, puts experts from technology firms, banks, and consultants in the hot seat to answer questions on the future of payments. Topics of discussion center around speed, globalization, digitization, regulations, and more. Listen in to this dynamic discussion about the ideas and developments impacting payments.
I'll do a quick introduction, then I'm going to have our panelists that are in hot seat give a quick introduction and their company and about what they do at their firm. So I'm Uma Wilson. I'm with UMB Bank. We're based out of Kansas City, Missouri. We are about $38 billion in asset size. I'm the Chief Information and Product Officer. Thanks for the opportunity, and I'm looking forward to it. So Ben
Bianchino, Director at Coupa Pay, which is obviously a part of Coupa, based in San Mateo, business spend management company, also based in Kansas City. Looking forward to the discussion today.
Hi there, I'm Kristin Robertson. I'm the Director of the Account Management Team for Payments and Corporate Cash at Finastra. Before Finastra, I did come from Bottomline Technologies, where I spent 25 years as a strategic director selling into the world's largest MBFIs and corporates. So I have familiarity with both what the banking needs are as well as the corporate needs are for payments.
Good morning, everyone. My name is Jeff Feuerstein. I'm with Bottomline Technologies. I lead our Paymode X product team. So Paymode X is a full invoice to pay solution, helps companies pay and get paid.
Craig Jeffery with Strategic Treasurer. I'm the managing partner. Our firm does consulting and advisory services to banks, corporations, and fintechs. We also have an Inform arm where we publish a tremendous amount of material. We have a research part of the business. We do 12 annual surveys. Part of our media operation, we acquired CTM File. So if you have your phones and you're open to LinkedIn, please follow ctmfile.com.
Well, thank you. So we have some questions prepared. So I'll just start with the very first question, which is, what is a guidance or feedback you would give to corporates or banks or things that they should be focused on for the next coming year or two? So I know that could be a lengthy, kind of a loaded question. The best way I would ask is if you could give that in 3-word choices. What comes to top of your mind for corporates and or banks?
I would say automation, enablement, and directory.
I would say strategic partnerships is how you'll innovate, win, and grow on both sides of the equation.
Security, data, interoperability.
Shift it to 3 phrases, if I can think of them, as end-to-end, security, and APIs.
Well, the next question I would say is, what are the hot buttons with payments? What is changing most significantly? This industry, I think we've talked about this, in our ecosystem, we add more payment options. We don't take anything out of rotation. And the beauty about our framework as well is we have opportunity for every new players and the new entry to have a space in the segment, which is not a bad thing. It actually provides more innovation. But given some of you guys coming from some payment stream that has been relatively young or entry into the market, what are the things that comes to top of your mind when it talks about payments, and what are the hot buttons around that?
One of the top ones I know for us is supplier adoption of what we offer, right? And that's at the top of the minds of our customers as well. Obviously, they have lots of options. They have lots of people, some of us on the stage, right? Asking them to take payments in different ways, asking them to look at POs in different ways, send invoices in different ways.
I think you raise a good point. I think you need to first, Uma, support the traditional payment types that are always been in the marketplace. But with COVID and the pandemic, it's really amplified the move towards change and innovation in the marketplace on both sides of the equation. And there's so many market disruptions going on from new and innovative fintechs, and really consumers and businesses looking to change the way in which they do business. So really embracing the innovation, looking at the new payment types, making it easier for your customers to consume your products by having the right partnerships with your banks?
I think, first of all, like the automation and what I would call choice for different payment types. It's something that you've got to have open for both the businesses that are doing the paying and the businesses that are receiving the payments, right? So enabling that choice is critical, and it helps with the other things that make money and data move, which is payment timing and discounting and financing, et cetera. The other, I think, really big hot button is security. There's I would say, a myth that payments are naturally secure, and that's not necessarily true. There's a feeling, I would say, in the market that there's an expectation, certainly from our consumer lives as well as in businesses, that they are secured and that they're always perfect. And there's a ton of work that makes that happen.
There's definitely a disadvantage being at the end, and never said many good things, but I would say complexity and transition. Complexity is there's new payment types, there's new systems, there's new standards, entirely new payment rails, and that has to be accounted for, and that increases the process of exchanging value. So that's a massive thing. I've heard some of that from everyone so far. The transition part is, how do we handle the changes with technology, everything from APIs to emerging networks and registries to concerns about fraud. I think this transition, the end game is an end-to-end seamless process or straight-through processing that's enriched and fully featured. And that's I don't know if that's impossible, but that's the journey that we're going on. So those are the two things I would say.
Switching just gear a little bit, as far as we talk about checks in our industry, we talk about a lot of traditional payments without going into every single payment option. Real-time payments. I know the definition when I talk about real-time payments, it's part of the Clearinghouse Initiative or the Federal Reserve Initiative. So ton of time the industry is spent, and I know many folks in this panel as well, your team is spending a ton of time trying to make sure that we are supporting the need that exists. So what is your take on it? What do you think is going to be the success rate on the deployment of the real-time payments? There's so much energy around it, respectfully. Most of the corporates are opportunists. I mean, they're very much looking forward to it. But at the same time, the unknown is this going to be something that's going to take like another 10 to 20 years to see the adoption? What are your thoughts on it? What are you hearing from banks, or what are you hearing from corporates?
Yeah, you're absolutely right. There's a ton of interest in real-time payments. And I think, frankly, here in the US, we could perhaps use other countries as a barometer as what to expect. So you look at today, we've got one clearing rail that's available for consumption, which is the Clearinghouse. And FedNow is currently partnered with folks like Finastra in a pilot program and is coming down the pipes to give both banks an option for how they choose to actually clear real-time payments. What I'm seeing in the banking community is it's almost at this point a competitive play. A lot of their corporates are looking for banking partners to have this rail available to them. So they're worried that if they don't actually start adding this to their portfolio, that there could be lost business opportunities as their customers go out periodically in the marketplace and look at what their banks can provide them from an innovation perspective. And they're now seeing this as a really have to have for when they're ready to consume it. But I think what matters most is trying to figure out from the banking side, as well as on the business side, what exactly are the use cases for the outgoing payments? Incoming is kind of a natural progression. As soon as banks turn it on, they start receiving incoming payments. But how do you actually monetize that for your consumers and make it a market differentiator for them? So it really tends to vary industry to industry, vertical by vertical. So it's super important to understand from the bank's perspective where they want to target and grow their business. And from the business side of it, how could real-time payments make you unique in the marketplace? For example, I talked with a bank yesterday that focuses on education and working with government, basically school districts. And we talked about using real-time payments potentially to pay their substitute teachers that come in. So they come in, instead of waiting for a paper check or a payroll run, imagine if you could differentiate yourself one school district versus another by paying those teachers the same day that they actually show up. That would allow them to maybe prefer coming in for your school versus another if they have a choice. So that's just one example, and there's many more. And I think it's really important to think that through and to make it meaningful, because folks are looking to understand how it would impact their business and help drive adoption.
I'll take that from a corporate perspective. I think that in business to business payments, there's always going to be some lagging, right, in terms of when you start talking value proposition on real-time payments. Mostly because it's really real-time settlement in the B2B world, right? If you don't have a PO, an invoice matched up, approved, ready to pay, who cares how fast the settlement happens, right? If that takes your company 7, 10 days, if you're doing it manually, are we just putting a Band-Aid on, what's happening on the front of your process? But I do agree from a B2C perspective or the example that you gave, those are huge opportunities. But I think on B2B, we got to figure out the front end of the process before there's like a true need for that real-time settlement is what I would call.
I love the comment on looking at international markets, right? If you look globally at payments, for a lot of reasons, there's other markets that have seen same day and real time, and it's much more common. If you've been to the UK 5 years ago, even 10 years ago, you had a frictionless experience when you went to check out for your coffee because you could just tap and go. 10 years ago, you could go to the subway, tap and go, and totally a frictionless experience that it literally took our country, a global pandemic, to get contactless terminals in almost every place that you went. The when on real time in B2B is a little bit of that sort of hygiene, if you will, in terms of how we think about payments gets to this market, right? Because to me, it's the right thing to do to have real-time payments. It makes a ton of sense. The data that's flowing through with what's on both the request for payment as well as making the payment are the right things. We've just got to find the use cases that sort of open this up. Like today, it's like we're in the world of, you used to have to pay for your mobile app to be a solution, right? You paid your software that you got, it's like if you wanted to get that same software in a mobile app, they charge you for it. Now you're like, what are you talking about? It starts on mobile and then it goes to the software. And so we're going to make that transition. Right now, you're paying for that real-time payment. At some point, we're going to realize it's just hygiene. It's just the right thing to do. And real-time payments are going to grow in B2B and I think in the B2C flow.
Increasingly, no one tolerates delay. Everything goes fast. There's nothing that goes slower. There's an aspect of, on the consumer side, you want everything instant, right? I have an account for my dad's account was at one bank and my main stuff was at another bank. You need to transfer stuff. Well, wire transfers are a pain. Writing checks and driving to the bank or trying to get their app working to scan it. That's so 2005. Now you just Zelle and all of a sudden it's like a wire transfer that happens instantly. One point is interesting in this is that on the B2B side is where is the weakest or the slowest link? You talked about, hey, there's this whole process that's 15, 18 days. You're going to speed the last bit up a day or half a day. That's a small fraction of it. But at the same point, that whole value chain or time chain has to be reduced. And so do we keep working on smaller parts? But speed is one component, but the value of information and knowing what goes on is probably more important than, it's speed with other things, speed with information, speed with knowledge and awareness and visibility.
I think that's a good point. And if you think about, where we are from a source to pay or procure to pay process, right? The payment can sometimes be a carrot, right? To get the supplier to exchange PO and invoice information electronically, right? So I think I could see RTP in that view from a B2B perspective of tell the supplier, hey, listen, we can do real-time payments with you, but this is how you have to exchange information with me. I can't get a paper invoice from you and still do this, try to do a real-time payment 7 days later when I, figure out what the payment was for.
Well, one thing that no one touched on, one more quick point, is that operationally, it's a different way of doing business. So, banks are frankly struggling with what does it mean to be 365 days a year, 24/7, whereas you're accustomed to the operating windows of NACHA or the Federal Reserve System for wires. So it is a bank has to consider the operational dynamics. And from a corporate and individual consumer side, we expect that immediacy. We want to be able to move payments in real time over the weekends when we choose to do so. But by doing it and having the finality of payment, there's also an operational benefit that you're dealing with any repairs or rejects up front. You're no longer dealing with knocks, returns, and frankly, the recourse that you have with traditional ACH. So it forces you to have better hygiene at the front end of the process and catch issues, frankly, before they occur.
This is not a rapid fire, but I'm going to ask, if you are a betting person, how long it's going to take for real-time payments to be successful in the United States? It's in just one word.
Define success.
Adoption. Let's talk about the adoption. Adoption is extremely important. So that's why our payment streams never get out of rotation, right? They all stick around here forever. So if you want to sit here and say the adoption is going to be 50% of US is going to be in real-time payment settlement rather than the traditional checks or ACH or other payments, what would be your guess?
Total or B2B, B2C total?
B2B, B2C. Just it's a guess.
Okay.
I'm not going to hold you accountable. I mean, there's.
Yeah, I was gonna say you're going to write this down.
No, I'm going to write it down. I'm going to look at the video and write it down. This is just a curiosity.
I'm going to
just
get
to
a call in 2030 from Uma. Like, you were wrong.
I'll do that to you for sure.
Yeah, you will. No, I mean, I think 5 years, 12 years. I'm sorry, 12 years.
Kristin?
Wow, 12 years. I'd say rapid adoption, 6 years.
I'm going to say 7 years. And the reason why I came up with 7 years is about 7 years ago, approximately, checks were somewhere in the high 60% of payments, right? And they're now in the sort of 49% of payments. So it's taken quite a long time to get rid of something that most think is an inefficient way to do things.
If we're talking 50% of payments, I'm going with 15 years because everyone will forget. YouTube probably won't exist. This will be gone. But
okay. Well, thank you. Thank you so much. So that is actually a good segue. So
maybe I shouldn't have said all that stuff.
Hey, sorry, can we do a more specific question? How long will it take for urgent Treasury wires, right? I've got to do a Treasury wire. How do I do it without logging onto a bank site?
Someone's going to say smart contracts, I'm sure, but I'll let you guys cover that where it's built in.
I mean, I think it's real. That's really more of a banking system question, right? Because the banks on either side of that transaction have to be ready to accept an instant transaction.
I would say this way: in order for the vision of as a treasurer in the division, you want to have an option where you go to your own internal ERP, whatever application you're using, to say, I want to send this urgent wire. This is where the payment stream, it's not really about the banking side. This is about your company and whoever your preferred financial provider doing it through APIs, right? Or the Swift messaging. It is not about going into a banking portal or logging in with those tokens, your super duper safe 4-digit PIN code, and you got to flip it over the debit card and enter the other 3-digit super duper PIN code. It's all exposed everywhere. So I would say the best way is APIs. And that was one of the follow-up questions I have for the panelists as well. When we talk about real-time payments, we talked about data quite a bit, right? Is data important? Absolutely. Who would say data is not important? It is important. But the key is which format? There's ISO 20022, and there's of course there's a Nacha format, then there's your format, then there's my format, there's about other 1,000 formats out there. The question goes is Swift, ISO, and also the other part is this the time for us to talk about blockchain? We never talk about that, but I would say the best way I would answer, not trying to avoid it, would be as API. So you would create after your approval process is done, you will send a message to your financial institution to consume that API, assuming that all the security and everything is considered, and we'll execute that transaction. So you don't have to worry about logging in. You don't need those fancy tokens. You can just put that away, and that's where the control comes into play.
Yeah, I also have something to layer on to that. I think that what I've seen a lot of corporates do, if you're a large corporate and you've got a significant number of banks, it may make sense for you to look at developing either through a fintech or a banking partner, basically your own internal bankware portal. So basically what that gives you is consistency in things like request for payments, approval workflow, your own internal security and fraud controls. And as Uma then highlighted, having the connectivity to your community of banks is going to be an important piece, whether that's via API or near real-time, batch file interfaces. But they need to be chatty, meaning you send a request for a wire, you're getting the acknowledgement, you're then getting the final confirmation with the Fed reference number. And it's really based upon, frankly, frankly, your SLAs with each of your banks. So you need to know that if you get the wire request over, whether it's via SWIFT or a direct connection from your organization or your fintech that you're getting the service from to your bank, that you will have a certain SLA to get the acknowledgement and then the final Fed reference time. In my past life, I used to have corporates that would time it from when they would initiate a wire request to when they would get the final Fed reference number. And I had some down to 2 minutes, which I thought was very reasonable. And again, there's lots of pieces to the puzzle to streamline that. But the end game gives you, that consistency, one source for multi-factor authentication instead of all the different bankware portals.
Part of that question is, if you think back, let's say 5 years and we think forward 5 years, a batch processes for wires or other activity. There's some delegation of authority in a company. People are making approval on payments, which may be off system. Maybe someone signing a piece of paper after the fact, right? That happens at all companies, despite what it says in the audit report. That occurs. So there's this internal audit process. And then at the bank, there's delegation of authority and rights by people to receive it. And then what happens? There's a batch file that goes across that's controlled by an ID, a password, and some encryption that's set up on the system. So these two elements aren't talking. And so if there were something where you could have all the approvals that are tracked and locked in that the bank sees and can compare against their list, so delegation of authority matches the permissioning at the bank, then you have all of that. You don't have tokens because everything's signed, everything's tracked.
Can you share your thoughts about ISO 20022 and SWIFT? It took our industry about 10 years, right? We're in the journey in that long marathon that we're going on with adoption of SWIFT and the ISO side of the equation. So what are your thoughts as far as there's a lot of buzz around blockchain? I'm not talking about Bitcoin. I'm talking about distributed ledger, blockchain. Should folks in the room, should they be thinking about blockchain rather than SWIFT and ISO? Because we tend to focus on like the next 2 years, looking out 5 to 10 years. Is that going to be the new payment mechanism or information we're going to be exchanging? What are your thoughts on that, Craig?
So when you say ISO 20022 and you say SWIFT, I would say, what is SWIFT? SWIFT is a network for messaging, for payments. There's tremendous value in the network. That will continue. If it was all delivering messages with the old message type, that would be a problem. Even if it was just a channel for passing messages, using an ISO 20022 standard, that may not be enough to keep it going. But I think their plans and their development on a payment platform means that APIs won't necessarily take out SWIFT. They won't, because you can connect to their payment platform with APIs. It creates an integrated experience. And so the power of their network, 14,000 banks across the globe, representing, I forget what percentage of bank capital. It's huge. And so the power of the network for SWIFT will change, but it's also going to be enabled by some of those items. So when people shift from a terrible standard like BAI2 or other ones that were designed well in an area where it cost $1 million to transfer 2 bits of data, so there's 5 numbers separated by commas, well, that's great. But if you take that and you enrich it in XML and each number now describes what it is, if that's all you did almost nothing. So if you're a bank, you don't provide more data or enrich it, you haven't added value. You have a better vehicle, but you've left all these containers empty. So it doesn't help AP or reconciliation or other areas. And so I think that's really the mix. And so if SWIFT does it, makes that change, that'll help it. And I think we need to think about that and change.
The blockchain question is an awesome one. And like, as a product guy, I love digging into it. Should people be thinking about it? The answer to me is obviously yes, you should be thinking about it. But we need to have more adoption, more standards, because if you've got one party in a two-sided network that wants to make payments, you have one hand clapping. It's up to, I think, banks, corporates, and just businesses to continue to get educated so that you're aware of the information and aware of the myths so that we can really accelerate what can enable fast, secure payments with lots of data.
Thinking about the future and how we want to reshape the way we do payments and commerce is critical. On the topic of blockchain, you actually shared about security when we opened up the discussion. Our security framework in our country is something to be proud of. As a financial institutions or fintechs, we've done a good job of layer securities. So we have multiple stops rather than more cohesive approach. Do you think that in order for us to rip and replace kind of a new security protocol, the new way of thinking, is blockchain is going to get us there? Or is that going to be the existing framework? which is going to give us a better security? I mean, as a product force, I mean, I know we all love to vision and dream. If you have to dream, what do you think would be the best option for us?
I'd love to dream. I think there's a better way than what we're doing today. Blockchain as a vision, to me, offers an exciting vision. I don't know that that's the end state today. There's a lot of room for us to grow as an industry in payments, to be more secure, faster, provide more visibility into data. What I would say is my 7-year estimate on RTP, I'm going to give it like 15 for blockchain.
When people hear blockchain, they get uncomfortable with it because there's a lot of known unknowns about it. And frankly, it's an opportunity and a threat to many of us in this space, which is why so many banks and corporates and fintechs are looking at what blockchain could mean to them. But don't assume when you say blockchain that it's necessarily open to everyone. There's a lot of folks looking at how do they develop their own blockchain really as a closed offering to a specific subset of folks. And I think that as this industry will have a fiduciary responsibility to make sure that the security is at least equal or better than what they've traditionally experienced in the past.
I think we are mentally prepared for blockchain, and COVID helped us a lot with that. So you think about signing agreements, this whole print, wet signature, mail it. Then it became, okay, can we accept a scan, yes or no? And then COVID happened, and we went from 30% of people, or I'm making that number up, 30% of people accepting agreements that way to everyone uses right signature, DocuSign, and it has routing, it has approval. So you see all of the document and the activity all the way through to the end. And it's super easy. It's in a central spot. You can see the authorizations. We're prepared mentally, but are we prepared system-wise? I think that's the core of your question. That's part of the core of your question. Do our systems support that type of flow? For the most part, it's no. And so that's another chasm. It's where we are systems to where we need to be systems. And there's a jump, and that's a change. We see that in every technology. And I think we see that in payments. And that's the hard point, that when you said 15 years, that might be how long it takes to change the tech. Mentally, I think we're really close to that. Technically, no.
There's software tech, there's infrastructure, right? There's, you were talking about like, hey, are the banking systems ready for this, right? And all that. There's complexity for sure. But back to your question, like, should people be thinking about it? Like, where should we be? Absolutely. Like, let's, as much as we all can get informed, I feel like that answer is yes. Yeah.
Directory. We have a race for directory, right? There are a lot of directories out there. It's not that it's a bad thing. That's fantastic, because that facilitates and fosters faster payment settlement and great way to bring two parties together. So that's fantastic. At the same time, now we have also created this bifurcation of everyone have their own directory. Going back to Kristin made a point, as an industry, if we don't have one unified way to make a fast progress towards it, it's going to be a struggle in the long run. So what are your thoughts about directory? Because I know there's the Coupa Pay and there's also Pay Mode X within Bottomline. What are your thoughts about it in directory?
Yeah, I mean, I think the question on directory is, what is it a directory of, right? Is it just suppliers? Is it D&B type information? Is it payment information? Is it all of the above? I tend to trend towards it needs to be all of the above. We don't have all that information on every one of those suppliers, that's for sure. However, that's the way this industry is going. If you're not collecting all that information, do you really know that supplier? Are they really in your network, right? If you don't have that. And as far as, thinking about a bigger picture of, some sort of standard, I think that would be welcome. However, from a competitive landscape, right, in America, we're very good at not mandating things like that. That allows for some of us to be created and exist. So how do we balance, competitive framework of, a country that makes so many great companies with, the best thing to do for, ease of business?
How do we create the best way for like ease of business? How do we, create better experiences? The other thing you said, Ben, right, is my words are like, there's a land grab for the networks. Payment networks are going to, continue to exist, likely trying to create efficiencies in how businesses pay and get paid. The directory business is certainly growing as a standalone entity. My take on that is like, only interoperability is good. Like, interoperability is only good for us. Interoperability on the directory itself is only helpful. because if everyone's participating, everyone else gets the benefit. So as long as there's like a mutual ecosystem that enables those directories to share information in what I'd call both a public and private way, then let us compete on all the other things.
On the supplier side, they're obviously running into death by 1,000 portals. Every system has a portal, right? Whether it's AP, whether it's Treasury. Like, if I'm a supplier and I have a bunch of customers, how many logins do I have? But I think the networks that exist today, the more they open up for their suppliers and allow their suppliers to interact with their system, maybe programmatically instead of via a portal, I think those are networks that are going to grow organically and then be in the best position to strike when maybe there's a standard that comes along.
I was thinking about our treasury friend who's got, a bunch of different portals he's got to log into, right? And actually, it's like the more time you think about how do our end users spend time out of the application, the better off our users will be. Why do I need to log into something to like receive funds and data, right? There's other ways to communicate that. And sort of going back to the API question a little bit, but there's other ways to communicate that information.
On the interoperability, I know it's off script again. It's easy, but we struggle about interoperability. It is extremely very hard for us to get every party at the table to look at that one unified vision. So I'm going to ask Craig, given that you work very closely with corporates and engaging and consulting with them, what are your thoughts on interoperability? And if you have the power, how would you do it?
Well, interoperability or embedded finance or open banking, open treasury, I think that's the power. I mean, you use the term interoperability. It's not just, what's the power of networks? How many people or end users are on it and what you can do on it and how you can enrich the experience. And so networks that can connect to networks will win. I don't think there's one central repository for all legal entity identifiers, all the rich information you said, that everything in one. That's never going to be the case. So interoperability has to succeed. Then that's the end game, because if you have 4 networks and they all connect, that is a magnitude of power, right? The power of networks as it gets bigger, it scales logarithmically.
One thing to add that I'm seeing both on the banking side as well as the corporate is a push towards really open finance orchestration. So this kind of layers into the APIs as well as an expectation of both banks as well as corporates, whether through their Treasury Workstation or ERP partners, to be able to easily plug and play in a competitive marketplace the fintechs that make the most sense for their business. So that could be multiple different closed networks that we see with like Coupa and PayModeX. It could also mean other new innovative fintechs that are coming to the marketplace. That interoperability and the free competition in marketplace is where I think the market's going on both sides of the equation.
So Kristin, while you have the mic, account validation, right? We talk about interoperability, directory, real-time payment, settlement. Can you just give us your thoughts on account validation and how important that is?
It's extremely important. Frankly, it's a big play for why corporates choose to go with a system that is a network, because frankly, it's the vendors are really providing a fraud and due diligence aspect on behalf of the corporate, where they're vetting that the actual bank account that's provided is owned by the particular vendor. And it's a struggle for corporates because they don't have access necessarily to the same best practices as organizations where that's what they do as their core business, is onboarding vendors and going through the compliance and due diligence checking. So until there's a better way to have access to things like early warning or better things for corporates to consume to get that sort of bank account validation and ensuring that they're paying who they believe they're paying, I think that the value of these closed networks will continue to remain.
What is a compelling reason for a corporate or end client to partner directly with fintechs compared to going through their financial institution partnership?
From a fintech perspective, one of the differences that I've experienced in the last year since joining Bottomline and really focusing on the PayModeX network is every day we are thinking about our product, our solution, our network, and improving that experience. And we sell that solution to our customers, and we're incented every day to make that better. And what I would just share, versus a bank, is that they've got lots of different reasons to bring you compelling solutions. We are sometimes one of many of those solutions for that bank to resell. And so we like when we're partnering with our banks that we're on the front lines, right? So we're helping that bank deliver everything end to end. because that's how we are delivering the best experience for our solution, whether it be direct to corporate or in partnership with our bank. And because of that, it's like the absolute best experience of what we can deliver for PayModeX, which is full invoice to pay, AP automation, account validation, security. So partnering with us means you're getting like the purest of PayModeX versus in some cases, got a reseller example, and that bank is trying to resell a product that could be washed a little bit from its pure sense. So that's not the go-to-market approach that we take. We like that pure sense end-to-end, whether it's through our bank channel partners or even through us direct. But that is a risk in terms of getting the best experience.
So I think it's also super important to understand from a corporate's perspective, and we also see this on the banking side as well. There's a big push to try to reduce the number of vendors that you're partnered with. It's expensive to onboard a vendor. It's expensive to do your annual risk reviews of those vendors. And frankly, when you look at some of the fintech profiles, a lot of them are smaller startup type companies. The benefit of choosing to partner with your bank to consume these new innovative fintech solution sets is that, frankly, you're relying on the bank to have done the due diligence and to provide you with that extra level of security, that it's a product that's been well vetted. And again, you're consuming it under your bank's paper. So again, you're not bringing on the vendor, having to maintain the relationship, do your own risk and mitigation of consuming innovative fintech solutions.
You know, there's a, if you will, a stereotype that sort of says like, look, you've got to work with the fintechs because they're, you know, more innovative. It's like the banks are innovative, right? Like they've got loads of smart people, right? Lots of banks. What banks struggle with that fintechs offer, and it goes back to like that area of focus, is speed. It's just the speed at which a lot of fintechs can work versus the speed at which banks can work. And it goes back to it. It's because they've got things like compliance. It's got things like they've got a little bit more regulation, that all of these things come into play. It's not that the fintechs have more and better ideas. It's that when those ideas come, we can move and we can enable banks and we can enable corporates to move faster.
Yeah, banks have capital, which is pretty important for businesses, and then they have long-term relationships. So institutionally, they have longer relationships with their customers over long term. And so it's very symbiotic what goes on between those two.
There is always the chicken and the egg concept, which comes first. Who's going to drive innovation? So, Craig, what are your thoughts about what can we learn from the consumer payment experience and the business payments journey, right? Which is going to be taking the lead? I mean, in the next coming years, is consumer payments is going to be the drivers that's going to drive innovation? Their business is going to be a fast follower, or is that going to be the business that's going to be driving that bus where consumers going to hop on it? What are your thoughts on it?
I need to set this up so I don't get slammed by the other people on the panel, or maybe there'll be some support, but it's what's happened so far. Innovation comes from consumer side and bleeds over. There's the increased expectation. You know, we talked about the speed of payments. I think 2 or 3 years ago, the AFP Pinnacle Award here was given to Uber because they were paying people 4 times a day. And we're like, 4 times a day? Why do you need to get paid 4 times a day? I guess because you can. And, you know, you get coffee, you do a ride, you get it, you can fill up your gas tank. And it's like, okay, that's interesting. So we learn about speed. And so that expectation changes. Everything that's done on the corporate side is more complex, or most things are more complex. You have to have segregation of duties, multiple signers. And so it always seems to lag because we've got this layer of security over it. So the working assumption is it has to be able to provide some feedback loop to the consumer side. And to the cases, can we prove it? Or can we think about it? So part of it's a challenge to think about it. And so that's one way of defending myself in the front. But I also want to say a couple things. So before I get chewed up on this one, but it's like they're ready and they're going to go through it. But security is one feature. Corporates are way better on security because they have larger sums. They're learning and experiencing security better. That's one. The second is the richness of relationships between businesses, the business-to-business relationship and the relationships with their banks and the relationship with the fintechs. There's more data. There's more information. If data is king, as someone said here, I can't remember who said it. She said data is king, cash is king, data is king. There's a whole bunch of royalty here. The richness of the relationship of the supply chain financing, of business processes, that extra data the ability to use and leverage that for relationship has to bring about some results that could influence downstream, because it's like the power of the network. It's how big it is. There's an exponential factor. There's an exponential factor of data, and we have to find out what that is. And so my challenge to anybody else who speaks against that is, are you not creative enough?
On the East Coast, if you drive down the highways, you put RFID tag. Now, without any toll booths, you can make payments at 65 miles an hour. The friction has totally gone away. The way I think we can learn from that experience is it says a lot about like the trust in what's happening in the payments. And if you connect some of the things that we've been talking about relative to like the need for directories is because we don't know who we're paying and we have to onboard our vendors. And like the reason why I can meet someone today and send a Venmo, because I pretty much trust this person, right? The way that corporates do that is usually in days and sometimes in weeks and maybe even in months, depending on how much compliance there is. The amount of trust that we need to improve and level up in B2B payments comes with, it enables that security. And with the right protocols, it enables that data to come through. And so it's just like, let's figure out how we make payments 100 miles an hour. And the way we'll do that again is with trust in the system, with the right moving the data and the money at the same time. Consumer, we don't have the same data problem.
I believe that a lot of the innovation comes, frankly, from the consumer side into the business. We expect things to be, as you said, 65 miles an hour, real time when it comes to things, even though it may be just appearing to be real time. So when you look at things like Venmo, I was pulled into that because I've got adult children in college who expect, cat mom to be on hand to provide cash when needed, right? So that was how I adopted that. But when you look behind the covers, it's not really real time behind the covers, right? But I also believe there's an expectation on the consumer side for banking to be seamless, for it to be integrated, and for their actual businesses that they're working with to provide that in conjunction with their banking partners. So having things like you're making a big purchase, maybe you've got a significant other who wants to buy a John Deere tractor, and they're able to get, embedded lending as a part of that process where they don't even know that they're working directly with John Deere's bank. That is what, the actual individuals are now assuming and expecting from the corporates that they do business with, which is also forcing the banks in the industry to adapt and change.
You mentioned the Coupa, the end-to-end, payment process, all those different steps. And that seems to be part of, that's a business process. It's tracking items. And even if you were to think back on RFIDs, that came from the business side, right? It's on shipping containers. And so if we look at payments as only the last element, so much is going to flow from the consumer side. But when we look at it, that's part of the transacting of business, and we don't want a UI. We don't want those other things. Data makes more sense. There's value transfer. There's an aspect of that where it's a richer, more complete, supply chain financing, settlement. There's more opportunities that are there, and hopefully some of them will flow over. I'm trying to figure out the car and toll booth thing to come back at you, but don't have it right.
Well, many thanks to the panelists. Thank you so much. Really appreciate it. And many thanks to you guys for joining us this morning as well. Thank you.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.